Today's video will be covering interest on the client account. When keeping client account money in an account where interest is applied, we need to consider what to do with the interest that is being generated. Rule 7.1 states you account to clients or third parties for a fair sum of interest on any client money held by you on their behalf. So effectively, you are accounting to the client their sum of the interest. So generally, the interest rate you can specify. And what we see in firms, what they tend to do is to use the interest rate a client could potentially get at a high street bank in an easy access savings account, or if interest is generated on the current account holding the client money, you could use that interest rate as your basis. What you tend to see is that due to the admin cost of tracking this interest and calculating it, firms frequently specify that they'll only pay interest above a de minimis amount of usually between 20 and 50 over the lifetime of the matter. This shouldn't be hidden in the very small terms and conditions. It should be made quite clear to the client in the documentation when they are signing the engagement with you. You could look at this only when the client matter has concluded. Some firms like to look at this also maybe yearly or maybe twice a year to calculate the interest amount. So Rule 7.2, the second part of this rule, states that you may, by a written agreement, come to a different arrangement with the client or the third party from who the money is held as to the payment of interest, but you must provide sufficient information to enable them to give informed consent. So that is very important. So it's important then that the client should be well enough informed, that they have enough information available to be able to compare the interest policy of your firm with another firm down the road. The spirit of this rule is that the client's best interest is put at the heart of this decision. Keep in mind the rules of not acting as a bank. So the flip side of this is not to provide a more advantageous position to the client than they would be able to get at a high street bank. Next time, we will look at a very chunky part of the rules, and that is the accounting systems and control part, a very big rule which will split into two pieces. Remember, staying informed is key, and thank you for watching.